All right, we got that inflation data, and definitely that's going to steer what's the decision that's for next week. Therefore, the MPC, that's going to decide how much it's going to cost you to borrow money in the economy. So we got the data for June there. That's 22.22%. Let's talk to Mr. Bismarck Rewane now, CEO of Financial Derivatives Company. Great to have you on the show, sir.
Good morning, and thanks for having me.
Yeah, so we finally have that data, even though we're still waiting for other data, for the Nigerian economy from Q1. Talk to me about this latest one now. For the month-on-month, I'm seeing inflation rate doesn't seem to be that good, even though year-on-year seems fine.
Yes, when you have a difference between the year-on-year and the month-on-month, it always brings you back to the point of what is the base effect. What was the economy looking like at this time last year? If you look at all those variables, you can see that the downward trend in inflation was maybe due to base year effects. But having said that, because core inflation has increased, because food inflation has increased, because month-on-month inflation has increased, it tells you something that the structural defects, structural rigidities in the economy still remain. So what you're having is some transient movements. But if you have had transient movement for 3 months consecutively, it means that the trend is actually becoming your friend. So that's what you normally say in investment. So having said that, what are the inflation expectations? Inflation expectations are more important than historical inflation. The expectations are that, generally speaking, that the price of petrol is going to decline because Dangote is doing all that it can to achieve uniform pricing across the country. The expectations are that the exchange rate is stabilizing, even though it's appreciating against a falling dollar, but the fears of a massive devaluation are no longer there. Also, there's every indication to show that the Central Bank of Nigeria is trying to contain money supply growth. With these three factors put together, one should have no doubt about the fact that inflation is likely to be moderating. Having said that, we have to bear in mind something also, that this is the planting season, right? And we are going towards the harvest as it comes along. At that point, the price of foodstuff begins to come down. But we are seeing some indications, some very frightening indications. Bag of rice, which had gone down all the way to about 75,000, is now back up to 87,000 naira, and is likely to head towards 90,000. Beans is up by about almost 6.25% to 85,000, and strangely, we are seeing tomatoes also moving in that direction. So we are not out of the woods, but definitely we are not going to be suffering from major inflationary bouts as was earlier feared.
All right, let's look deeper into the data now. We see for urban inflation, that's about 22.72% year-on-year. On a month-on-month, that's about 2.11% higher than rural inflation. That's at 20.85% year-on-year. Month-on-month, 0.63. Do you think the rural side of things is seeing some easing there with inflation?
Well, the reality is that the difference between urban and rural inflation is always explained by the cost of transportation. So there are two components for the cost of transportation. One is the cost of fuel, the other one is the state of the roads. What we had in the last month was the Mokwa flood effect, which pushed up the cost of transporting goods from the food basket to the food consuming markets. But at the same time, we also had the price of petrol come down. So while on one hand, we had petrol moderating the price of cost of logistics, we had the bad roads and the flood effect moving the other direction. Therefore, in general, we would have had a neutral position, but generally speaking, we've seen cost increases, which need to be worked on. So the work of the fiscal authorities made very clearly defined for itself. One, do something about the road network. There's been a lot of talk about roads and projects, but the roads that lead somewhere are different from the roads that lead to nowhere. So many of the projects that we're talking about are roads that lead to nowhere, right? And now we have to change that orientation. We have to immediately get the road concessioning project off the ground immediately. The government and the people cannot wait. If not, you will end up with happy statistics and unhappy people.
All right, so still, looking at the regional side of things here for inflation, we see the highest annual inflation by state. That was in Borno there at 31.6%. Monthly increases, that was much higher in Ekiti, about 5.39% higher. Then we see monthly deflation in Zamfara, Niger State, and Plateau. Help us break this down, sir.
No, you see, it's very clear. There was the Mokwa flood effect. There are also other items, but in Borno State, you can tell because there was the whole Boko Haram, the insurgency and insecurity rearing its head again. So we are back to the usual suspects: insecurity, road network, and then smuggling. In Ekiti State, we can see part of that is because some of the products are going across the country, but obviously there's a lot of liquidity and income in the southwest because of the high price of cocoa. So they're having a mid-crop harvest. They're making cocoa went as high as $9,000 a ton. So you can see that there's some liquidity effect in the cocoa producing areas. In the northeast, there's insecurity. In the north central, Plateau and all that, there's also insecurity and also the quality of the roads. But more than anything else, the national trend, when you're comparing last year with this year, it points to something very clear, that the base year effects will be out. And then when we have a stable base year effect, you begin to see inflation either stay there and everything now revolve around logistics, output, increases in output, because that is where it matters. Output increases in production, output increases in getting products to the market, logistics cost bringing it down, and availability of finance. All of these things will play into what the Central Bank of Nigeria, the MPC, is going to be talking about on Monday and Tuesday. So we have some interesting days ahead of us.
Yeah, definitely interesting days. But what are you seeing for the next meetings? Are you seeing a cut at this point or another hold?
Definitely, I'm not a gambling man. I'm not a speculator. But I think that my gut feeling, my instincts and intuition tells me that there will be a cut or 25 basis points. Why do I say that? Because global inflation has increased, Nigerian inflation is declining. Depending on what methodology you use, even if you use the old methodology and add 10 to what the new numbers are, it will still come out at about 32. The peak was about 35. So there is the trend is our friend, but the difference, because the US and the UK and even in Europe, the inflation is increasing while inflation is declining here. It gives us some wiggle room, and therefore the probability is that maybe 40% hold, but 60% a drop of about 25 basis points, and that will not kill the currency. The currency is strengthening because of the discipline in the monetary policy framework, explicit inflation targeting, and actually having a transparent foreign exchange market. That has helped. If we didn't have that, by now, the Nigerian inflation data would have been frightening, both to those of us domestically and, more importantly, to those international investors. But right now, everybody seems to be aligned that the Nigerian economy is limping its way out of the crisis.
Right, and talking about the trend being your friend at this time, we've seen the Nigeria's equities market there have this monster rally, hitting new highs, regardless of inflation being elevated. But we're seeing currency stability, and if you look at other asset classes, we're also seeing the likes of Bitcoin there, hitting new highs at this point. Mr. Rewane, does this continue, or is there some kind of black swan event that could change the direction of what we're seeing?
Yeah, we call this financialization of markets. When you are financializing the market, all of a sudden, because of stability, because of alignment of global markets with Nigerian market, We are now beginning to see people take advantage of this, but we shouldn't get carried away. But the important thing here is that you know that the stock market is, the stock prices are the present value of future earnings. What happened in the last 3 years was that a lot of companies, big ones, banks and others, were hit by foreign exchange losses due to international obligations they had. Now, most of these institutions have domesticated their debt. The Nigerian banks have actually increased their buffers and increased their, in fact, the GT Bank has issued paper in London and it was oversubscribed. So what you are seeing is that because the fear of foreign exchange losses have been eliminated or minimized, you are likely, so a lot of investors are now playing in and leaning in to the fact that the earnings are going to come out in second and third quarters are going to be much stronger than last year, and therefore are already pricing that into the shares. So a lot of people are rushing in to buy that. You could see what happened first Holdco yesterday. There was some shifting around. The turnover increased sharply, but generally speaking, we think that those companies that are exchange rate sensitive, MTNs, the Dangote Cements, the Nestle's, the Guinnesses are all going to be doing much better than they did last year. Will they claw back all their losses before? They will claw that back over time, but people are investing in their capacity to deliver value. The EBITDAs are all up, and quite frankly, we think that it's a good year. But again, like markets are cyclical. There's always a boom to bust cycle. This will happen for the next 6 months. We are going to be seeing an increase in earnings, increase in stock prices, but a point will come where there will be a correction, but not now. So right now, the trend is our friend as far as inflation is concerned. The trend is our friend as far as earnings are concerned, and everything else, not touch wood. We should be the December should be a pretty not only dirty but also interesting December.
Okay, so you heard it here. We're expecting a dirty and interesting December for 2025. Thank you so much, Mr. Bismarck Rewane, for breaking it down for us there as the CEO, Financial Derivatives Company. Thank you for coming on today, sir.
Thank you for having me.